please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, reports have suggested that the Shanghai rebar steel prices have hit a 7-year high on supply fears, that is supply shortage fears. Naushad Akhtar Ansari, the CEO of JSPL, and Paul Bartholomew, Senior Managing Editor at S&P Global Platts, are joining us now to discuss the future of steel prices, maybe over the next couple of years. Good morning, gentlemen. Thank you very much for joining us. Well, first, let me ask the commodity expert, Paul. What's your reading of steel prices? They started peaking, they started rising at least about 3 years back. And a lot of people worry that now we would be at the top of the cycle, with some people predicting even probably a global growth slowdown. But that's not what the prices are saying. What are you reading of the price charts?
I think the fundamentals are generally okay. Obviously, there's been a lot of things happening recently with the US tariffs. But what's got the market, particularly in China, excited in the last few days is all these announcements or rumors of announcements that the Chinese government are going to cut more steel production or reduce utilization rates with the aim of improving the environment. Because the market's very sentiment driven in China, people get quite excited. They sort of feel that that's going to restrain supply and push prices up. So that's why they sort of pile into Shanghai rebar futures. The physical market has also increased, but I think there's also other fundamentals. And I think in terms of the export prices or China's ability to export steel, I think there is a bit of a natural resistance from China's overseas buyers. There's only so much they're going to pay, particularly at a time when there's a lot of uncertainty in the market.
Okay, Mr. Ansari, who's the CEO of JSPL, is also here with us. Mr. Ansari, good morning. What do you believe is the reason for this spike that we've seen in steel prices? Of course, there are supply issues, but what about the demand situation? How do you see it shape up?
So I think I agree with Paul that this is something in China, it is a lot sentiment driven, primarily because of certain reports in the section about future cuts and so on. I think we should not look at it only in isolation, because if you also look at what's happening in the rest of the world, for example, let us just say in the Middle East, the prices have not really gone up so much because of the Turkish lira coming, the devaluation. There is quite a bit of issue in that part of the world where the prices have come down. So if on one hand in China we find that the prices have gone up very, very substantially, primarily because the demand has gone up, is going up almost by about 8% or so, and then there is a fear that there is a production cut which is likely to happen, and that's something which has led to this. On the other hand, in other parts of the world, as I said, that also the prices have not gone up so much. So I would say that overall, if you really look at let's say the steel business, or especially from the point of view of the Indian steel business, I think it is not something which has suddenly gone to such a level that it has peaked. I think there is still headroom available, and the market is reasonable. In fact, in the July the prices dipped a little bit for the rebars, and now you see that they are already strengthening. So therefore there is a very healthy demand within the country itself, and we do believe that there is a headroom available for the prices to go up in India too.
Okay, actually, Mr. Ansari, I heard that Indian steel companies could be sitting on a double advantage, that percent, but supply is growing probably 2 percentage points lower, maybe at 6%. In fact, in the July trade deficit, what stood out was steel imports. They had gone up by 20% year on year. And now you have a rupee advantage, rupee at 70. That was the second advantage analysts were talking about. Are you seeing a price rise now for the month of September? If yes, by how much?
Yes, so that's exactly the point I was driving at, that we certainly see a headroom for the prices to go up. I mean, there are multiple reasons for that. Obviously, there is a cost push. The Indian iron ore prices are not coming down, they remain up. We still keep hearing that the prices are going to go up likely. So there is certainly a cost push. But more important is that the demand and the supply gap is widening a bit. And I think that's something which is certainly going to push the prices a little up in September. As far as long product is concerned, where we're just coming out of monsoon, September also will be, some impact of monsoon would still be there. So I'd imagine that prices will go up, but not really very high. I would imagine that going forward in the last quarter of this calendar year, certainly the prices should be able to go up substantially.
Okay, so how much, sir? Can you just give us an idea of how much in September itself and how much till the end of the year will prices go up by?
I wish I knew it exactly, but nevertheless, let me try and make hazard a guess. So I would imagine that in September, compared to the prices which are come down by end of July or even in the first week of August, that should certainly go up by about 5% or so. We'd expect that it should certainly go up to that. And in the next quarter, it should be certainly reasonably more.
So are we looking at, more than 14,000 rupees per ton as your EBITDA per ton? I mean, in the quarter gone by, EBITDA per ton for the domestic steel business had gone up by 50%. Since things are looking positive, can we even expect about 15,000 rupees in the quarters to come?
So, in this particular quarter, as I said, compared to the earlier quarter, the prices had dipped. So therefore, I would not expect the EBITDA to go beyond what was already there in the earlier quarter. But as I said, in the next quarters to come, let's say October, November, December, those quarters, I would expect that EBITDA would remain at least at that level, if not go up.
Well, Paul, I wanted to ask you, are you only seeing sentiment driving up prices? Or do you think that there could be a supply issue as well, which will push up? What's your, guess on the direction of prices, and not just for rebars, for even hot-rolled coils?
Well, I mean, the thing I should probably mention, with all the talk of, utilization rate curbs in China, China's still producing record amounts of steel. It's actually up 6% on last year. So, they're still producing lots of steel. I think some of the other things that we're seeing in China is that has also affected market sentiment is, the Chinese government putting a lot of money, or saying it's going to put a lot of investment into infrastructure, into rail. I think there's a bit of a fear that the impact of the trade tariff might have a sort of negative impact on the Chinese economy. So Beijing is very keen to sort of shore up the economy over the rest of the year. So I think properties market's going quite strong. It's a huge consumer of steel, but also they're putting a lot of money into infrastructure. That's something else that's been picked up, I think, by some of the futures markets. It's always difficult to come up with prices, particularly, there's a lot of volatility and so many moving parts. I think just in the near term, the Chinese market sort of feels that there is a bit more, price growth over the next month, but I wouldn't want to put a number on it.
Only for 1 month, and thereafter you expect it to peak off?
Well, I wouldn't necessarily say that, but it is a notoriously sentiment-driven market in China, and there's always a bit of residual bearishness as well, always. But I mean, I think the fundamentals are looking good. I mean, if you look at the exports, they're down considerably on last year. So I think the feeling is the market is in balance in China, provided that those steel mills actually meet their obligations to keep, trimming production. But there's no doubt the Chinese government is very serious about the environment now. So I think these tweaks to capacity and production, they're going to be ongoing. I think, to use a cliche, they've become the new normal now.
Okay, so just before we end the discussion, Mr. Ansari, you mentioned that in the second half of fiscal year 19, you expect the EBITDA per ton to improve. You also spoke about how demand has been picking up. What about volume growth? Because in the quarter gone by, the volumes were up almost 50% as well. You're sitting at a little over 1 million tons. What kind of growth would you forecast for the full year?
So if you look at it, what's happening in Indian business, I think the utilization percentage is going up substantially. Also now that some of the companies have changed hands, and the new owners obviously would be very keen to push up the utilization. So that's something which will certainly increase the availability in the market of the products. And of course, I mean, if you look at new projects, I mean, there are no major new projects which are really going to be commission very soon. You know, it's also in this environment when the banks really are not very friendly as far as investment are concerned especially in the steel sector. So I think in the coming few months and years, I certainly expect that the demand, which is growing up at a much better rate compared to the production, I mean that gap is going to increase, and that's something, you know, which will substantially keep the prices in a healthy situation.
So will you be able to make use of this gap and push up your output? What is the space you have for any quick increase in output, and how much by, say, for the full FY19, can you up your output?
That's a very good question, and you see we have one major advantage. We have commissioned Angul only recently. The Angul capacity, nameplate capacity is 5 million. I mean, we of course had the environment clearance so far for 4.5 million. So you know, and right now we are producing at close to about 55% or so, and that is already in the process of ramping up. So in the next 6 months or so, certainly we must be able to add to at least about 35% of the capacity additional over what we are really making, and that's something which should be very healthy for us.
All right, we'll have to leave it at that. We aren't touching power today because it was a steel day, Mr. Ansari. Thank you very much for joining us. Paul Bartholomew as well. Thank you very much for giving us the international perspective. Prices can stay firm for another month, but thereafter we have to look at the supply dynamics. That's the word coming out, but going damn good for the local steel producers. You know, the Tatas may be able to ramp up a bit from Bhushan Steel now that they have it, but it always takes time when a new guy is in. But in SR and Bhushan Power, it's going to take a while. I mean, they are still in kind of in the hands of an RP. So that makes it very good for JSW, Tata Steel and JSPL, who are in strong hands, to take advantage of the demand-supply gap. But back to markets.
Oh, yes, back to markets. Well, the stock of the moment now is Dabur. It's almost a 4% rally that Dabur is seeing right now. And Dabur is now getting to almost a 1 lakh crore market cap. So don't lose sight of that. 85,000 crores is what it has touched already. Our technical guests are back with us. Ashwini Gujral, Mitesh Thakkar and Rajat Bose. Ashwini, this was your trading call in the morning. At this price, would you book profits or would you let it run through the course of the day?
See, the way Bank Nifty is misbehaving, I would take profits on the upside. And we are now getting follow-through on Bank Nifty after 100 points also. And that is the reason we didn't want to chase it on the upside. So my sense is that the market should move lower because banks obviously have greater weightage than IT, etc. But Dabur, again, you know, everything good is so overstretched that, you know, when you get hit with a correction, that's tough to say, but market is entering consolidation. So try to buy things which have corrected a little bit. Individual stocks, you know, today is a banking day on the downside. So Kotak is a sell with a stop of 1265, target of 1200. SBI is a sell with a stop of 309, target of 295. And Strides Arco is a buy with a stop of 482, target of 500. Now, on corporate banks, this is a correction, but it could be a 5, 7%, 8% type correction. So, if you want to buy them, your correction is coming. So, that way, it's still a buy overall, but for the next few sessions, till we have this crude issue, etc., they could have fairly strong selling.
Oh yes, the crude factor, the oil factor clearly is.
Just a word, I know, you know, the investors are playing a big gamble. If Kotak has to sell 10%, then it is 24,000 crores of shares that will have to be offloaded. But the expectation is that the Reserve Bank will see it as disruptive and probably tell him bring down 5% this year and 5% over the next 6 months or something like that.
Sure.
So people are really gambling on what the Reserve Bank, what he's able to converse and get with the Reserve Bank.
Oh yes, clearly. But you know what, the point I was making is today clearly, obviously the market's taking cognizance of oil as a big risk, and that's why, you know, you're seeing this move on the banks. Just pull out the intraday chart of Canara Bank. That's the one which is now making fresh intraday lows. Ashwani, you are selling Bank Nifty right now. What about, you know, of course, SBI was one of your calls. What about some of the names like Canara, BOB, where we have seen rally in the past?
Canara can easily fall to 260. So everything corporate bank is going to come off 8 to 10%. And obviously, a bit smaller stocks tend to fall more. So the Bank Nifty fall is just about starting. I think today is the kind of day when you have a trend day on the Bank Nifty, key levels, macro news. I think sellers will have field day today.
Okay, sellers will have a field day. Well, Mitesh Thakkar and Rajat Bose are also with us, so let's go straight across to them. By the way, we also have, Nestle, which is really surging now. Almost a 4% rally on Nestle. It's above that 11,300 mark. Just look at that move on Nestle India. Mitesh, what stocks would you be looking at this morning?
Yeah. So I would stick to pharmaceuticals. I think I agree. I think the banking chart is just on the intraday basis just getting into a weak zone. If it breaks 28,100, you might see some more declines of about 150-200 points. But pharma still looks good to me. So Dr. Reddy's is a buy. Keep a stop at 2420. Look for targets of 2600. And Cipla is a buy. Keep a stop at 650. Look for targets close to about 690.
My God, this is suddenly a savage selling, or at least offloading.
Because
now it is 0.4 down,
115 down on the Bank Nifty. And the point Lata made in the morning as well is that by Tuesday, the macro trigger that the market was taking cognizance of was the fact that crude's at 71.5. All of a sudden, this moved to 75. You want to see if that's a big negative trigger. How the market reacts to that.
When you're multiplying it with 70 rupees,
exactly.
And not at 69,
that is
it makes it different.
And today's expiry also, so that could be playing a bit of a factor as well.
So
the weekly options expiry.
taking in the PSU banks, which had seen a very good rally. Rajat Bose, good morning to you. What are you trading today?
Good morning to you all. I'm trading a couple of pharma stocks and one tire stock and building material stock. First of all, the pharma stock, Torrent Pharma, I would put a stop loss below 1750. Target would be 1810 to about 1822. And Dr. Reddy's target stop loss would be 2425. Target would be 2530 to about 2595. I'm expecting a big move to happen in Dr. Reddy's. And Kajaria Ceramics. Let me elaborate a little bit on this stock. On the last day, it actually clocked huge volume, that was record volume, and had a big candle, and it has given a long-term reversal signal there. And it is carrying on that move. Chances are that we would see the first target on the upside, 495. That is also my target for this move. And I would keep a stop loss at 455 and ask traders to buy Kajaria Ceramics. Okay. And Balkrishna Industries is the star stock in which I hold personal positions. I mean, some stocks I personally hold. 1315 is on the close is my stop loss, and target would be 1395 to about 1425. Balkrishna has a long way to go, but for now 1425 should be the target. Apart from that, Dabur and Nestle should be on the watch out because they are posting all-time highs.
Oh yes, they are. In fact, the Kajaria Ceramic move is interesting actually, because you had that move on Tuesday as well. I think the last quarter's numbers, perhaps the stock made a bottom after the management commentary.
People are actually bundling it all with cement and the Kerala reconstruction.
Yes.
And of course, housing finance anyway doing well. Affordable housing expected to finally fire up. So all told, Kajaria, building materials generally are having a field.
Exactly. Ashwini, your thoughts on Kajaria? Because that had a big move, of course, earlier as well.
See, Kajaria has gone through a big bear market. And now with that Tuesday move, it seems to have bottomed out. So, the sense is that everything dead and beaten up, mid-cap, building material construction, that has come back into a bit of fashion. But for the moment, what you want to expect is probably a rally back towards the 200-day moving average. So my sense is that 584 thereabouts is the place where Kajaria can go to.
Okay. Thank you very much, gentlemen. We just have to get to the Credit Access Grameen listing. And it's a discount. It's a discount by a good 7%. So that's 32 rupees lower than where people have paid in the IPO. 422 was the IPO price.
We'll take a short break on that note. Lots coming up on the other side. Manisha Gupta will join in with some commodity.